we are going to talk to the CEO and whole-time director of Medi Assist, Mr. Satish Gidugu. Satish, good morning and thanks for taking the time out. It's certainly been a reasonably good quarter, but there's been some mixed cues coming in as well. I want to start with your own assessment of the quarter gone by and what we can expect going forward.
Thank you, Adam. Always a pleasure to be here. So I think we've had, considering Q2 is a seasonally soft quarter for most of the industry, I think we've done well in terms of retaining our leadership in the group market. Year on year, we've grown over 18% in group plus retail premiums, and retail has seen a significant jump at about 41% year on year. And we continue to hold on to our market share, and I think from a growth perspective, we are quite satisfied. And there's also been a margin accretion, from the last quarter, especially as the synergies from the Raksha acquisition are beginning to show up.
Satish, can you also give us an idea about how things are faring when it comes to Mayfair specifically? I believe it's been a challenging quarter for you all. What's the way forward? What are the current challenges?
Adam, like you've seen with the headcount increase not being in line with IT/ITES, and it has had a cascading effect on the Mayfair business as well. It's a marginally lower contribution from Mayfair, but we expect that to sort of pick up in the later part of this year.
Okay. Can you also tell us the implication of tax rates in general with respect to how things are faring? Also, how does seasonality play into the picture when it comes to this particular quarter?
So, I mean, you've seen most of the other results from the insurance companies. The growth has been muted and the loss ratio has been on the higher side. I think for us, the biggest impact is related to how the employment numbers are growing in the country. There is still a softness in the growth of the employment numbers, and then which, of course, directly translates into the health insurance premium growth for the country, right? And then of which we are a major part of. But we assume that the employment numbers, will not stay low for long, and we'll continue to see an uptick, and we'll continue to grow faster, or at par with the market. From a tax rates perspective, Agam, I think all of us have been rooting for reduction in the GST on health insurance, and clearly, I think the whole industry is sort of voting for it, and we hope to hear something positive fairly soon.
Right, Satish, also an over 94% retention rate despite the fact that we've seen inflation in terms of, medical equipment. Going forward, should the inflation pressures remain, do you think that retention rates could come off by just a tad bit?
No, I think the retention in an annually renewing business for us obviously is because of the work that we do on fraud-based abuse prevention and also managing medical inflation for our insurer partners on the corporate accounts. And as we continue to keep our work on the network sides constant, we hope to only improve our retention. In fact, our retention has improved by about 30 basis points despite adding Raksha, Advantage, and all of that corporate book this year.
I'm reading a little about the cost containment initiatives that you guys are taking, and that means expanding your cashless network, reducing frauds. Can you take us through and elaborate a little bit more about all the initiatives and all the measures that you guys are taking at the moment to bring your costs down?
So I think our costs are mostly servicing costs, Adam. We don't underwrite risks or pay for claims, but I think it's important for us to do two things as a benefits administrator. One is significantly elevate policyholder experience. Here is where we're making use of machine learning, all of the data that we have. So we have, in fact, in the last half, over 38,000 patients were allowed to sort of take discharge from the hospital even before hospital generated the bills, right? This is our predictive technology at play, trying to completely disrupt the way the discharge process happens to improve policyholder experience. And at the same time, it's also our job to manage fraud, waste, and abuse better for our insurer partners so that their costs come down. We made significant investments. In fact, there's a 60% increase in the amount of money that we have saved for our insurer partners compared to last year H1 to this year H1. Again, purely based on our data science, our machine learning models are, delivering some fantastic results. And we hope to really deliver value to our insurer partners and then remain a preferred partner.
All right, and a final question then, any updates with respect to your Paramount acquisition? When are we expecting the regulatory approval to come through?
So we are awaiting the regulatory approvals. Historically, we've seen between 3 and 4 months is the time that we've taken to close out from the time we have announced the acquisition. We are hoping to sort of back to similar timelines.
Okay, Satish, we'll leave it at that. Thank you so much for speaking to us here on NDTV Profit on the earnings and, of course, all the other plans on the annual as well. Thanks so much for taking the time out.